All right, so welcome to another episode. And in this segment, what we're going to do is we're going to talk about small account growth. And the question is which stocks do you trade when you have a small account? A lot of people look for high flyers and those kinds of things. But in this episode, I'm going to give you 5 kind of tips of things to watch out for when trading a small account and choosing the stocks. Again, keep in mind, this is going to be tailored to depending on your experience, the different types of things you like to trade in terms of strategies. Some people trade options, some people don't. Some people go only long, some people do long and short. So it will vary person to person. But in general, I'm going to give you a few handfuls and tips to go with. So tip number 1 when you're trading a small account is look for stocks that trade a million plus in daily volume. Stocks that don't trade more than 1 million shares could be a problem. So if we go in and just take a look at stocks like this, like look at the volume here that's in there. So if you scroll down and just look at the volume, okay, this one is about 94. Actually, just back up. We look at the average 20. That's about 60,000 shares. There's barely anything that's traded. You can also look at, pull up these different charts, and you can see if the chart looks a little staggered, it's really, really off. Here's another one, TTOO. So let me pull this one up, and just to show you, this one's got a lot of volume, and you can see it's interesting in that it's got a lot of volume, but in the past, it almost had no volume. So look at the stock chart that's been heading down, 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 down. So you just have recent volume, but you don't have an average of about 1 million all the time. So here's another one that's kind of similar. You've got some recent volume, but not a lot. And here's one, MIMO. Let's pull that up. And we'll go to the trade tab. If you're using the panel, you've only got about 300,000 shares traded today. So this stock is not one of the candidates. So stick to more liquid vehicles, because usually it's not the issue of getting in, it's getting out that's often the problem. Let's look at tip number 2, and that is stocks that trade weekly options. So try to avoid stocks that don't have weekly options, because weekly options, if you do get into trading options, they give you more flexibility. And even if you don't trade options, just seeing the weekly options is just like a good check to see if that stock is liquid and very active. So in this case, we don't have weekly options. We just have like kind of the standard 11, 39, 102. And you can see that that's just because they're standard, they're not yellow. But if you go to something like, let's say, Apple, you can see you have weeklies, and it says right there, weeklies. So just by checking if it has weekly options, that's kind of like a good double check to see if that stock is traded actively. AKU, let's pull this up. Let's see if it's got weeklies or not. AKU, you pull that up and type it in, and it doesn't even have options. So when you have no options at all, you're even less liquid. Let's pull up another one. Let's go to, how about ZOM? So this is another one right here, ZOM. Probably doesn't have options either. See, no options right there. And then some of them will have options. They just won't have weekly options. So let me go down a little bit more on, well, how about rent? This one, let's see if this will have it. Rent. And there we go. We've got some options, but no weekly options. So it's another quick check of to see, hey, is that viable? Is the stock a good candidate? And I would say probably not. So let's go to point number 3, or tip number 3. Look at popular names that most everyone knows. So if you're looking at, let's just look at this one, Rent the Runway Inc. I have no clue what they do. And if you somehow heard about it, that this is going to be the next awesomest company in the world, I would say stay away from it. And usually, as a general guideline, look for stocks maybe about $10 or more. That's kind of a good range, which is going to be our next tip, because these stocks over here, even though they're pretty big companies, they're not as stable on the market. So stocks with about $10, $12 or more, you can start to find names that you actually may have heard of and other people have heard of. And if you find that, then now all of a sudden they're much better candidates, because obviously with a small account, it's a little more difficult to trade stocks that are more pricey, like $300 a share, unless of course you're doing options and that kind of thing. So as we start looking at $10 a share here, what I'll do is actually I'll filter this. And then when we filter this, what we can do is look at optionable stocks. So we'll do that. We will add a filter, add a true false column, optionable stock. So now we'll do optionable, and there we go. So we'll filter by these where it's true. So now I've got some options behind these vehicles. So if I go to maybe like some of these companies, some of these I don't even know a lot of these companies, but there will be one that eventually you'll run into that's maybe a cheaper stock. And as I look into this, let's see. Let's see if we got a more popular brand here. Weibo, maybe you heard of that one. How about Levi Strauss? This is probably a name you've heard of. So Levi's 1328, 3.3 million shares. So take a look. Levi Strauss. Volume, if you look at the average volume, you're already at 3.3 million, even though the stock price is cheap. So this is kind of a cheaper stock that's in the right range and has some stuff and is kind of a candidate. So if we start pulling this up, Levi, you can see it's there, it's active, it's got a lot of volume. Unfortunately, there's not weeklies, so this would still be a pass for me on a candidate, but you know, it could be more of a, hey, it's possible. It's kind of getting in the right range. Now we're taking a look. Let's see here. If we look at, let's see, Weight Watchers was another good one I looked at before. This stock's about $8.50. You've got about 3 million shares. It's in that zone. If we pull up Weight Watchers and look at this one, we've got weekly options. We've got volume in around 4 million. It's still only $8. Now we've got ourselves a candidate. So this is kind of what I'm looking at. And it's a popular company. Most people know Weight Watchers. So now you've got something to work with here. All right, let's look at point number 4, and that is kind of looking at stocks that are $10+ a share. I'm not saying you can't break this rule, but be very careful. Maybe $8 a share is okay, $7 a share. It will depend on the company because this one does fulfill the requirements. It also depends on the market conditions. If the market has been selling off lately, $8 a share might be okay. For example, this one could work. But in general, you might want about $10 a share. And that's just to avoid a lot of the clutter. If we go to, let's say, Hood here, it's right at 11, so it's okay. So I'm not saying you can't do something like Weight Watchers because it's 8, and I could, I wouldn't be against that. But it's more the issue is that people will choose something, let's say, around a $3 a share stock. And what happens is there's no volume. It's a cheap stock. There's probably no options or very little options. Let's take a look at SB. You don't have weekly options. So it just helps, this criteria helps you avoid some of those issues and problems. So that's why about $10 a share is kind of what you're looking for. And then let me go to point number 5 for you, is that ETFs can help diversify the earnings risk or the single stock risk. So a lot of these companies will have an earnings risk. And if you want, one of the ways to kind of mitigate that is we can go to, let's say, ETFs, and ETFs trade quite heavily. Things like SLV is only $21 a share. That one does have earnings, but FXI does not. And it's trading, about 9.8 million today, but on average about 27 million. And what you can see is it's very liquid. It's the China ETF. So if we go to FXI, you've got weeklies, you've got a ton of volume, 10 million, and it's still only $27 a share. So my point being is that if you don't want to deal with the stock, you could also go ahead and deal with the ETFs here. EWZ is the Brazil fund, XLF, you got GDXJ. So some of these are actually fairly cheap ETFs here, EEM, KRE, and you can look up some others as well, but these are just some of the ones that I have on the list here for you that you could check out. So anyways, those are kind of the tips and things that you should watch out for. If you're trying to grow a small account, these are probably the vehicles you may want to stick with. Otherwise, trying to find like that unicorn stock when you go into the US stocks and you got all of these and you say, well, I heard a lot of stuff about this company. And there might be, you might see, hey, there's a lot of volume or it's moving in the upward direction now. The problem is your brain is starting to trick you and play with you a little bit more, because what it's doing is hey, the news that you're hearing is about this company. The things that you're searching, the search history is now within this company. And what's going on is all the news feeds and things that are, creating an algorithm about the stuff you search for is now pushing more of that content. So what it's creating is a bias for you to actually enjoy that company more or get more information about that company. And it's not necessarily the appropriate or the right thing or the right trade or investment. It's just because these types of companies usually don't do very well. Could you throw a little bit of money in there? Sure, you could. You're taking a shot and maybe it becomes a unicorn stock, but in many cases, that's kind of rare. So on a probability basis, it just doesn't work. If you're willing to take a crapshoot or just take a big shot, sure, that's fine too. Anyway, my point being here is stick to some of this criteria and parameters and you'll be a lot better off. Thanks for joining me, and I will see you in the next episode. Take care.